I'm going to dive straight in, and I'm going to ask to you first, Fong Seng, about how can you give some kind of perspective in your 30-year career, how wealth management is changing in Asia, and what are the big changes right now?
Thanks, Mark. Yes, wealth management business in Asia has changed a lot in the past 20 years, and it's still evolving. I will describe the changes in a few key words. I'm sure everyone will understand. First, in the past, it's all about relationship. If I trust you, if I like you, you can be my best private banker. Today, I think it's all about competency. Yes, I need to like you, I need to trust you before you can be my private banker, but the overriding question is, what can you do for me? What can your bank do for me? So I think there's a shift from relationship to competency-based banking, and that is good. Secondly, it's about trading in the past. How can we win on this trade and the next trade? Today is all about portfolio construction and asset management. How can we beat inflation in the long run? Through compounding returns, through your portfolio. So there is a shift from trading to portfolio management in my business. Thirdly, it's about pricing. In the past, every trade you do, every product you buy, you probably get one all-in price, maybe plus a commission. You don't know what is embedded in that one price. Today, it's about price transparency. Tell me exactly how much you are making from me for each trade, each product, structured product, or mandates that I'm doing with you. And I think it's good for the industry when we move from embedded pricing to a total price transparency. And last but not least, in the past, don't ask me where I got my money. The less you know, the better. The theory of don't ask, don't tell. It's all about secretive and secrecy. I think today has changed. We want to know exactly where your source of wealth is derived. And we also want documents to prove your source of wealth before I can even do business with you. But I will keep all banking relationship between you and the bank totally private and confidential. So we are moving from secrecy to private and confidentiality. I think these are all good for the industry. Ultimately, I think it levels the playing field. It allows us as private banker to do more business, real business, create value for the clients, look into succession, things like this. So I think it's changed a lot.
And Ashmita, I'm going to ask you the same question. What's your perspective on how it's changing?
Definitely can, and I think what's fascinating is I think Fong Seng's view is very from the private bank centric, and mine will be more consumer bank. And I think from my perspective, what I really see is really like 3 Ds, as I call it. The first is the demographic shift, and I think we heard Nuno mention that there is a tremendous demographic shift which is happening. Asian wealth is obviously growing very fast at 11% compared to global wealth, which has grown at 5%. And I think it's coming from wealth creation in China and all over the world, but really in the middle class expansion which is taking place. We are also seeing a very clear need for the next gen wealth transfer. So that's becoming another very important thing which will happen. And the next generation looks at wealth very differently. They're much more digitally attuned and savvy. They are looking at risk-taking in a very different manner as well. And of course, in between, there is the idea of the entrepreneurial mindset which has crept in Asia, which is leading to a much more global perspective on wealth management. They're looking at global capital markets, non-traditional asset classes, alternatives, private assets. So therefore, that entire demographic shift is a big one for us, which we're all contending with. The second is digital. I think the advent of digital and the embedding of digital is going to be extremely critical for us. That doesn't take away from the human aspect of wealth management, but the more we incorporate digital into everything we do, we will get ready for wealth management in the future. The reason is this is happening across the wealth continuum. This is not just a next-gen, Gen Z, millennial phenomena. This is happening across, seniors. If you go to Japan and South Korea, by 2030, 90% of Japanese and South Korean consumers will be online. So that is the shift which is happening, and I think any wealth provider now needs to be able to have digital solutions completely embedded in the entire experience. And last but not least, from my perspective, is data. The Asian consumer is extremely data-oriented. They're very open to sharing data. They're very open to look at themselves as a segment of one. It's very unique. I am who I am. I'm Ashmita Acharya, and I want to have wealth management tailored to me, hyper-personalized to what my needs, preferences are. So the ability to weave in data and digital to everyday experiences is going to be extremely critical for us to succeed in the future.
Okay, brilliant. I'm glad you used those 3 Ds of demographics, digital, data. I was worried you were going down the deaf divorce route. So in this changing environment, I'm going to go to you again, Fong Seng, first about what are the big opportunities then of these changes? Where do you see the real opportunities right now today?
I think the whole market dynamics have changed, right? So I think the way the business was done 15, 20 years ago, and today, we used to travel to offshore markets to bring in private banking business. Today, I think we need to be compliant at where we are domiciled, Singapore, and if we travel to Malaysia, to Taiwan, to Indonesia, we need to be compliant at the country we visit. So the things have changed. I see an evolution where the big family offices coming to Singapore and Hong Kong. I think the 2 financial centers will benefit a lot with the opportunities to opening up, and you can see that with the introduction of VCC, encouraged by the regulators, there are more family offices coming to Singapore. I think the last I read is about 700 single family offices in Singapore, and maybe about 50 registered in Hong Kong. But in Hong Kong, you don't have the incentive. So there are a lot of family offices in Hong Kong which are not registered. So that is the evolution, and that will be the opportunity for private bankers.
Okay.
So they are trading up.
I think, you used the phrase before when you talked to me about suitcase banker, and that used to be what it used to be, and now that probably has bad connotations. You don't want to be called a suitcase banker nowadays. So, Ashmita, where do you see the opportunities?
I think wealth is becoming commoditized and digitized. So we talk about the democratization of wealth. It's a reality. So when you look at retail investors, they want access to what a high net worth, ultra high net worth investor gets. I think that, and that's really coming from the technological enablement of wealth management. Technology is making, and I think Fong Seng talked about, pricing transparency. Technology is going to change the pricing mechanics behind wealth management. We're going to have self-directed platforms. I know robo-advisors are just picking up, but we're going to have self-directed, low-commission platforms which allow access to wealth management across the board. So there'll be a lot of broad basing on the wealth segment, which is going to drive investor adoption and enhance client engagement and user experience. This will also happen in the advisory space. So the entire thing, what will happen to consumers is you will get better products, you will get better research, you will get it at a lower cost. So efficiency, simplicity, and transparency are going to be the core enablers of wealth management, very similar to private bank. On the consumer side as well, this is going to take place. The other is, I think that doesn't take away from the trust factor. I think relationship and trust is going to always be important. Yes, competency will matter, but there needs to be a long-term trust aspect for a wealth advisor. You need to differentiate yourself by bringing that element of trust, which at times, and Fong Seng and I were talking about it, sometimes becomes a little transactional. I don't think transactional will be appreciated. Competency, yes, but you need to be trustworthy. You need to kind of build on trust. And of course, finally, I think there's a huge opportunity. Again, I'm going to bring back that factor of the next generation. Our advisors are aging. The next generation is a very different generation altogether. They think differently. They look at global asset classes differently. They look at global markets. Their global mindset is different. We need to be able to cater to that and sort of anticipate their needs and have the right solutions for them. Because otherwise, 90% of next generation end up changing their advisors at the time of the transfer of wealth. And I think that is going to be something which is going to be top of mind for us across the wealth sectors. That's
a great stat, actually. Quite impressive. I guess kind of as a follow-on from that, you talked a little bit about this. What are the challenges today, and what does it take to be a successful kind of wealth manager in this world? Or what skills do you need?
Mark, I was thinking back, I joined Citi 20 years ago as a relationship manager. Frankly speaking, I don't think I would survive a day today if I started off as RM. I think it's becoming very tough to be a wealth manager now.
I don't think any of us would have jobs in today's world. It's much harder generally.
Correct, exactly. I'm so lucky that I'm old now. But I really feel like it's very important. Number one for a wealth manager is you need to be nimble. You need to keep up to date on what's happening in the market, in the industry. Things will change. Things will continue to evolve. So keeping pace with that is going to be very important. Number two is build on trust, build on relationships. It's very, very, very important. Move away, and I say this to consumer bankers, is move away from the transactional, look at the long term. The client is here with you for the long term. Number three is data. And I think I talked about it. There is a plethora of data out there. I think we are inundated with information. I think the wealth manager of tomorrow and today has to be able to synthesize that data, distill it, and make it, provide some credible information to our clients. So you cannot inundate them with 20 articles, 20 different themes which are happening. And I think people are skimming information. You need to kind of make that very digestible and relevant to your client. Digital technology, you need to leverage digital and technology to make smarter decisions. It's extremely important. You cannot live in the analog world that I've lived in as a wealth manager. I think it's very important to move with the times. Digital and technology and data is really going to make you empower your clients and empower yourself. And finally, I think risk and controls. I think it's extremely important, the risk and control aspect, because that is becoming more and more relevant. You are no longer the banker of yesterday where these things were not important. You need to keep yourself safe, your clients safe, your bank safe. So these are the elements that I feel is going to be even more critical for wealth managers going forward.
So of your 3Ds, it sounds like digital and data are even more important than demographics on that side, I guess, in charge.
I feel so. I think if wealth managers don't live with digital and data, I think you really won't be successful in the future.
Okay. And Fong Seng, on your side, you talked about this.
I think technology will be here to stay. It will continue to help improve the service quality to all segments of clients, from the biggest to the smallest. But I think for private banking, the high net and the ultra high net worth, the family office, I think the human touch is important.
Yeah.
Where I think how you relate to the clients, the relationship. Like I said before, I mean, the EQ is important in the business at all times, integrity, trust. I think knowledge, competency, IQ will come into play, more important going forward.
And I'll just say one thing here. You're absolutely spot on. I think that's equally important in the consumer side as well. I think, when I look at Citi Global Wealth, and now that we've come under one entire organization looking at the entire continuum, from emerging affluent to affluent, high net worth, ultra high net worth, relationships are important, trust is important, the human element is going to be more and more important. So for your simple needs, your transactional, a lot of stuff you can do digitally, but for the complex matters is where the human touch will be more and more important. So I don't think we can compromise on that. We need to elevate it and we need to differentiate on that.
Okay, so it's not that relationships are becoming less important, it's more that they're changing in nature of how that relationship works. Fong Seng, specifically on the kind of the challenge, the biggest challenge you see in wealth management today compared to, say, 20, 30 years ago, what stands out to you?
I think it's most unfortunate. With the regulatory changes, they are good because I think it creates a more level playing field. I think in terms of client experience, it used to take a day to open an account. Today, whether you are good clients, not so good clients, we check on you. It takes weeks and even months to open an account. The client experience aspect is going to be difficult. The other thing is the way we do a trade, the way we confirm a trade, voice logging. This doesn't help in client experience. But I think the whole evolution of the business will get better from here. Hopefully that, there is a credit bureau in most of the financial centers. In Singapore, we're talking about maybe we should have a KYC bureau where everybody can share some common information. This will help in the industry, maybe sort of accelerate account opening. And the way that trades are get confirmed, I know it is regulatory, it is control, cyber risk and things like this, but there must be a better way to have a better client experience. I think these are the challenges. And like what I said, cross-border businesses will continue to be a big challenge for us in the years to come.
It's interesting because I think that your KYC onboarding, that compliance process, that is again another facet of the digital data world of where that's changing quickly in a different way. I want to ask about some of the opportunities in the market, and we've had a few questions. Unsurprisingly, the first question on my iPad, I think someone had this pre-written, was on crypto. I'm just going to get it out of the way there so we don't have crypto questions all day. So I'm going to ask very quickly, what is your view on crypto assets? Do you think that crypto has to be a part of the investment portfolio?
From my bank Pictet's perspective, we are following the development. I think the blockchain business, the crypto will be an asset class that we cannot ignore. But today, I don't think there's a place for private bankers and for private bank portfolio. If you look at the volatility for the last 2 years, you can make a lot of money, you can lose a lot of money. And that is not my business.
Okay. And do you think it has a place in a portfolio?
I think it's very similar. I think definitely it's something our clients are active in. They're talking about it, they want to know more about it. I think we are watching the space very closely. But at present, I think it's more thing in crypto. So again, something we are aware of. Our clients are, as I said, asking, but we are staying on the sidelines because it has to meet many supervisory guidelines and internal compliance requirements at our end before we really actively participate in it.
I think it's really interesting because normally most of kind of the wealth management industry is presenting opportunities to your clients that may not be open about and giving them access. And instead, this is an asset class where the clients are demanding exposure to it. And there's that little bit like, do we hold them back and then regret it, or do we hold them back and then say, look, I saved you? It's a bit of a hard one there, I think.
Yeah, I think it's a little bit of more comfort is required for us because we are again in for the long term.
Yeah.
It is, and just having an asset class which is as volatile as it is, I think it requires us to monitor it over time before we are comfortable to be able to get into any sort of active advisory in this space. I don't think we are there yet. But you're right, it'll continue to be there. And I mean, I think clients, we were doing a client event the other day and the client said, this is great, love it, but what about a crypto event, I mean, so it's okay. I mean, we say that, yeah, that's great, like, good to know, but we'll come back to you, so.
No, I think maybe similar to most institutions, we have a team of people following the development of the crypto, the blockchain, something that we cannot ignore. The question is, when do we bring the clients into the picture?
Yeah.
Okay, question just in, there's been a bunch, but I'll let this one. Buying the move from transactions, will Asia wealth managers go towards fixed fees per account and away from AUM-based fees?
Yes, maybe. Definitely there is.
Yes, maybe, definitely.
I mean, there is so much happening in the pricing space, right? Like, I think Fong Seng mentioned pricing transparency is something that we need to look at. We are experimenting with different types of accounts where we do have, sort of a annual fee-based model rather than, the transactional fee-based model. So again, this is something that we are going to move to. I think it's happening more probably in the private bank space. We're also looking at relationship-based pricing. So definitely there will be an evolution in the pricing space in wealth management across the spectrum, all the way from emerging affluent all the way into the high net worth segment.
Do you have a different perspective or you agree?
I would say that I think the trend is towards, first I think transparency, as I've said, it will come, it will stay. I think it's more evolving towards portfolio. Like what I said, people look at it a bit long term, and a flat fee would be something that is talked about, but it's not there yet. Asians still like to trade. Now, even for trading products, I think the pricing transparency is very important.